Back to Market on Close. It's time for Options Corner, so we'll bring in Kevin Green into the conversation to see what levels he's taking a look at as we head into the close. How are things looking on your end today, Kevin?
Looking pretty good, Marley. Obviously, we've had a decent day trading around that 6,500 level. We have now broken through here, and now we're trying to hit a little bit of an area of resistance. Let's see if we actually still have some momentum to still have some gains or still make up some gains for the remainder of today's session. Earlier this morning, we kind of talked about the 6,500 level as a key area of resistance. That's kind of the first area of resistance, and that's exactly what it did. Over the last, let's say, hour and a half or so, we've been trying to break through and have some follow through here. Now, the next area that we were looking at this morning is 65.30, and that's going to be key for us going into the close. If I'm kind of looking at the levels right now, not looking at 65.30 as so much as of right now, but anything can really change. Looking at 65.20 though as your potential area of next resistance and potentially a pen risk area going into the close. And if not, if you have any type of failure, looking at 64.90 as your first area of major support. But we started off the day a little bit strong, had some weakness, saw a little bit of a consolidation. You could say maybe even a double bottom pattern happening with two hammer candles taking place back to back. And we've been in an uptrend, a little bit of a bull flag taking place or a consolidation, breaking out of that bull flag. What you'd like to see going into close is obviously us moving higher. 65.20 would be a key area for me, kind of going into the close. And that's really kind of the makeup right now when you're looking at the options flow just in general. On the SPX, we had some bearish flows early on, but it has been bullish as we've seen the day go by. And so that bullish flow, if it continues into the close, could set us up for a decent little, 10, 15 point move from these current levels.
All right, and as far as volatility today, has it been about normal or higher than usual?
No, I mean, volatility, I still think it's cheap, given the fact that we have some inflation risk over the next couple of days. PPI tomorrow, which is a little bit more volatile when trying to estimate what the number is going to be. And then you have CPI coming out on Thursday. But the VIX right now is sitting at around 15, which is implying less than a 1% move in the S&P 500 to the upside or downside. This chart here is just kind of comparing what we saw last year compared to what we are seeing this year. This year is in blue, last year is in red. We did see the spike to the upside in volatility last year around this time, Marley, and that's really when we actually had the kind of the revisions for the BLS data and when we started seeing a little bit of concerns around inflation as well as the labor market. This time around, let's just say that the market was bracing for a very impactful reduction when it came to the amount of jobs being added over the last 12 months, at least going up till March here, and we were already ready for that, and that's why we have not seen any type of spike in volatility. But once again, over the next 24, 48 hours, there's still an opportunity for re-rating higher for volatility, but the VIX is definitely diverging from what we've seen in the past. Not only what we saw from this time last year, but even the 10-year and 15-year seasonal trends. This is actually a relatively cheap market right now.
And Kevin, knowing that we have seen some of these divergences, that one you just pointed out on the VIX there, do the technicals indicate anything to you? I know it's harder to use historical data because they're diverging from normal patterns.
I mean, if you're looking at it from a technical standpoint on the daily chart, I mean, we've been holding up the bull case here over the last couple of weeks, actually the last couple of months. We're still in a bullish trend when you're looking at this channel that we've developed since May. We're hitting pretty much the lower end of that channel, leveraging that 20-day moving average as an area of support, and we continue to grind higher. And that's exactly what you would like to see. Until we really break down below 6,200, I think the market will probably continue to try to buy these dips and try to keep moving the market higher just in general. Once again, I mean, we had a consolidation. We've had some headwinds when it comes to price action. We've seen broadening out. We've seen rotations taking place. But the bullish trend from a technical standpoint is still intact. And I don't think that you're going to get that bearish flow until we have a black swan type of an event, something that is unforeseen, maybe outside of the economic data. Maybe it's something geopolitical. Or once again, you get below that 6,200 level. You fail the 20-day, you fail the 50-day moving average. And that's where the market gets maybe a little bit more heavier going into the latter half of this year.
And I know you've got another chart on AMD here. What are you watching there?
Yeah, this one is actually interesting. This came on to the radar here earlier this morning, but you are still seeing an uptick when it comes to options flow. So AMD has had a pullback over the last couple of weeks here. Still a bullish trend. Once again, bull flag. You're seeing a lot of this when looking at technicals, not only on the daily, but this is the weekly chart here. But today you actually saw the October 3rd, 2025 expiration calls getting an aggressive bid early on in today's session. There was actually a trade, a one block trade that went through for 9,800 contracts, if you will. Very low open interest when you're looking at the start of the day, 1,300 contracts on open interest. And Marley, actually over the last 15 minutes, the volume actually moved from around 10,300 contracts on the day up to 20,000, just over the last 10, 15 minutes or so. So there is an aggressive bullish activity taking place. These are new longs getting into this AMD position. And once again, you have that technical bull flag pattern that maybe we see a breakout over the next week or 2 weeks. This one is just an interesting one on the radar because you don't usually see these large blocks on AMD outside of leading up to an earnings announcement. So keep this one on your radar over the next couple of days.
Yeah, very interesting. Shares up as well to about 2.75% right now. So, really reflected in the share price as well, that interest. Final thoughts, as we know this is going to be, starting tomorrow, a data-heavy week, and we just got the revisions today, but the inflation numbers coming out, could be a potential catalyst.
Yeah, I think the catalyst is going to be the inflation numbers, and then looking at initial claims, if we continue to see that re-rate higher, hitting 240,000 or even higher than that when it comes to initial claims, the market might be a little bit more uneasy when it comes to just the labor market as a whole. And then where do we see a level on the 10-year where it becomes a little bit too concerning, where we correct too much to the downside? I mean, we're sitting at around, 4.1% or so. We have broken some technical levels to the downside, but do we kind of overestimate or overprice in rate cuts going into the remainder of this year? And I think PPI is probably the bigger number to be focused on and be concerned about than CPI at this point. We did see a hot print the last time around. Look at intermediate goods and PPI. That really tells you where inflation's kind of coming in. And then obviously we'll focus on CPI. And Marley, the last thing, when you're looking at services PMI, especially the ISM services PMI prices, those have been moving higher. That does actually front run core CPI. And that's a concern that you have 3 months from now, given the fact that the labor market could crack.
Well, Kevin, we appreciate it as always, and you'll be back with us too because we have Oracle earnings coming up after the market closes.